there, good morning and welcome to the program. The Voice is coming to you live from the nation's capital, Abuja. My name is Medina Azaki. Now, last week, the federal government, through the Federal Inland Revenue Service, did sign, a partnership with the French DGFIP to strengthen tax system in Nigeria. While the federal government, believe it is harmless, policy and agreement, and many believe that it is handing over our tax sovereignty to foreign interests. Now, these and more are some of the issues we'll be discussing with those who should know, but that will be after the break. Please stay with us.
On December 10th, 2025, something happened in Abuja that most Nigerians did not hear about until it exploded on social media. Do you know that the Federal Inland Revenue Service quietly signed a deal with France? A deal that gives Paris a front row seat to Nigeria's entire economic dashboard. It is called a Memorandum of Understanding between Nigeria's FIRS and the Tax Authority of France. Under this agreement, Nigeria will share what they call aggregated and anonymized tax data. France will train Nigerian tax officers, and French AI systems will be introduced into the new Nigeria Revenue Service, launching January 2026. Even aggregated data reveals everything. It shows who is making money in Nigeria, where the wealth is moving, how strong or weak our economy truly is. Once France has this information, they have it forever. France is not a charity. This is the same France that still controls the currency of 14 African nations through the CFA franc. The same France with a long history of economic influence over African countries. The deal was signed without National Assembly approval, without public debate, without updating Nigeria's Data Protection Act, no hearing, no scrutiny, no transparency. Nigeria already has the talent to build everything France is offering. We have Flutterwave, we have Paystack, we have Remita, and many brilliant engineers across our universities. But they were ignored. This is not just about tax. This is about who controls Nigeria's economic future. When a foreign power can see your economy in real time, they gain leverage, political leverage, financial leverage, trade leverage. They can predict your moves. They can influence policy. They can decide which Nigerian businesses rise and which ones die before they even begin. This is digital colonization. Very silent, very sophisticated, and more dangerous than anything we faced in the past. We stopped the colonial tax in 1960. We can stop the digital version in 2025. Here is what you must do right now. Share this video everywhere. Tag your representative and your senator. Use the hashtag Scrap FIRS France deal. Demand a public hearing before January 2026. Tell the government to modernize our tax system, but with Nigerian brains, Nigerian companies, and Nigerian control. If we do not stop this now, there may be no data left to fight for later. Thank you.
Welcome back. The discussion even continued before the program even started. I have in the house Wale Joshua, a long-standing friend and of course and a tax expert. Mr. Joshua, very, very good morning. Good to see you this morning.
Thank you very much.
It's been a while.
It's been a while. It's just the.
Have you been busy collecting tax?
We've been busy doing that, and we are pulling the weight of the new tax law, effect of the new tax law, trying to educate and trying to acclimatize with the developments.
Okay, all right. Something remarkable happened last week. I don't know if you kept your fingers on it. Dangote single-handedly said he's going to provide scholarship of 100 billion annually for 10 years. That's incredible.
Very, very incredible. And that's the whole essence of empowering the citizens in Nigeria. Not only empowering them, giving them good business climate to thrive, which Nigeria has given Dangote, and is a way of giving back to the society, which is a good one. It's a great one. Dangote Foundation has been intervening into many non-governmental sides of the economy, and that I think it should be commended for doing so, and more to come.
And we're all silent. People didn't even talk about it. Even the federal government has not spent that kind of money in terms of, scholarship or even education itself.
Well, we are in the era that cares about what goes south.
Yeah.
Well, if it were to be a controversial issue, it will have made the good headlines. Though I saw it as flash news on some media outfits, but it has not been given that publicity that it will have been given if it were to be a bad occurrence. That as it may, it's a good one, and I know that those who would benefit from it will equally feel the impact. And you know that Nigerians have been pushed to a point that they want to see the effect first before they know what is actually contained in the package.
I think for us in the North, we'll be so happy because if that will reduce the out of school children, if this scholarship will target out of school children, I think in the next 10 years, we'll be seeing maybe a 5 million or a 10 million reduction. For us, that will be the most, because it's a scholarship across the 36 states of the country. And so we are hopeful and believe that, working together with the traditional council, with the governors, with all the stakeholders, that scholarship should be targeted towards the, this out of school children, so that in the next 10 years we'll be able to say this number of children reduced, from the street. And we also do hope that that will also give the quality that we the educational system, deserve. Because my fear when I hear scholarship will be private schools are now going to gear up, and in terms of making money from the scholarship, and everybody will be opening new schools, and we're saying, okay, I'm going to open my school, and if I have a contact with the Dangote Foundation, then they will be sponsoring children in my school. That's a kind of business for some people.
The beauty of it is that it's been handled by a private individual, and it will be flexible to needs. If the need in one state is nomadic education, I believe that it will be tailored towards that. If the need in another state is to strengthen the private schools to ensure that they absorb the lingering capacity, I think it will be tailored towards that. So the beauty of that scheme is that it's privately driven, not like it's strictly from the public sector that may be too rigid, or that may need a law to amend or adjust one or two clauses to fit into the societal need. It's privately.
Maybe in the next couple of days or weeks, we should call education experts to help us break it down. How will this 100 billion annually work? Is it to go to the private schools, or is it to go to the public school? But like you rightly observed, if it is public, it will be too rigid. Amendment of laws and all of that will also come in. Same last week, another event happened. The federal government signed an MOU with this French, company to strengthen capacity. But what do you make out of it? The word France itself it just connotes some kind of negativity. The moment people hear France, they don't even want to know the details. They just say, "Kai, this is digital colonization."
Well, France has earned itself the name,
bad reputation
as far as Africa is concerned, because of the role they play in the francophone countries and the resentment we are currently getting from the francophone countries, and the kind of stay put to power and economic neocolonization that they used to impose on their francophone countries. So that as it may, we are living in a global village, and we are living in a world that's technology cuts across nations. It cuts across a border, and we have one critical thing, which is international business. So we may not be able to participate fluently in international business if we are not tilting either towards the east or the west. Towards the west in terms of France, UK, US, Canada. Towards the east in terms of Russia and maybe the BRIC nations. So we may want to tilt our policies towards that. If not, we have to do Nigerian first. So whoever is bringing the interest of Nigeria to table is where we tilt towards.
Why are we not going to do Nigeria first? Why is it so difficult to do Nigeria first? We are a fintech powerhouse. We have a lot of young people who are tech savvy. Why don't we strengthen our own, in-house capacity?
At this point, you want to think of IMF. You want to think of the influence of loans, influence of the.
Is it the one that is driving all of this?
They may not drive it directly, but in order to be in good record of these guys, whether multilateral or unilateral loan providers, we may want to tilt towards giving them what they want to get what we need. And while trying to do that, we may likely be doing the bidding of whether towards the west or towards the east. Nigeria have tried towards the east and have tried towards the west. So we are neither here nor there. So it favors us and it places us in a position to save Nigeria first, because we are neither in too much alliance with the West or too much alliance with the
But
East.
we're not in Nigerian first right now. Let me read the comment of somebody who wrote a paper in that regard. He said Nigeria is a fintech powerhouse. We have Flutterwave, we have PlayStack, we have InterSwitch, we have Piggy Vest, we have Bamboo, we have Nips. We lead Africa in innovation and internet usage. Our greatest asset is our people, yet foreign interests are circling, offering help that comes at the cost of our economic independence. Taxpayer data is a national power. Allowing foreign control over this data is a threat to national security.
That's a good one. But Flutterwave, NIBSS, Remitter, they don't play within the global space. What I mean by within the global space is global space of trade, global space of taxation. We have the safe havens, which are towards the Bahamas. So if we have something like that, if we have international trade, African Free Trade Zone, and we have some other trade, we have some other trade partners that we do work with. We may not rely only on homegrown solution to reach out to the global world. We may rely on global information, global technology to bring solution to whatever we have in our own country. Then I am of the opinion that all these homegrown solutions will equally lift up or up their games to meet up the global standard. If they have been in the class of global standard, they will play that role in making sure that they partner with the global obtainables. You know that these are.
But is that a justification to hand over our data to a foreign company, our tax data?
FIRS,
just because we want to play globally. Yes.
FIRS has currently debunked the fact that we've handled our data to state categorically that we are not handing it over to them, but we are giving them a free hand to advise, to give us technical support, and to give us advice. That's human capacity development. So those are the critical area where France is expected to come in. But the mistrust between citizens and the government has always led to the fact that we can't believe or trust the government at any point in time, because when they will hand over the back-end data structure, you and I will not be called to table at that point. So we need a watchdog over we can be subjected to that. We can create a kind of watchdog on FIRS to ensure that this has been well utilized. Then we need the NGOs, we need the non-governmental organizations to place a watch on FIRS on what they do, so that citizens will not be exposed, whether negligently or deliberately, by the agencies of government.
Okay, before we come to what we need to do, some of the fears that are being raised, one, it's tax data management becomes a financial puppet. That is one. The second one is mass surveillance and exploitation. That's the second fear that people are raising. And the third one is foreign control systems open the door to espionage, Also digital colonization and economic sabotage. And then the fourth one is geopolitical blackmail, real-time visibility into which sectors thrive and which sectors don't. And then they can struggle. The struggle gives France leverage in every future trade, investment, and loan negotiation. No serious country hands its tax backbone to a foreign power. So you see.
That's correct, very much correct. But it depends on how the level of exposure that we have to France in terms of this agreement. One, I want the National Assembly to come in this regard to ensure that.
But the National Assembly was not consulted when this MOU was signed.
Yes, but it should be referred to National Assembly in this guise, because National Assembly has the duty of oversight, and they have the duty of stay action first and let us review this MOU before you proceed. I believe they've been doing what the federal government have been doing what they feel is good for the country, and they feel that they can jump that critical aspect of agreement signing, which the Ministry of Foreign Affairs and possibly the Ministry of the Attorney General's office should have reviewed the MOU to see that it's in the best benefit of Nigeria. And you never can tell, maybe it has been contained in one or two laws which might have backed that up. So that being said, we have many concerns raised by citizens of Nigeria, and those concerns have to do with whether we are going to be safe in the hands of France or not. We may not be at an advantageous point handling over our economic information to France based on espionage, based on future perceived
geopolitical blackmail. That's a future trade and investment.
Then anything can happen between Nigeria and France. We may find a trade agreement between Nigeria and Russia, and France feels that it's not to their benefit. They may use our information against us. So at that point, we become vulnerable in the hands of that kind of
But
country.
Mr. Joshua, let me ask you, this president, the current president, is being, alleged to still control the tax of Lagos through the Alpha Beta, company. Is he also, using this, MOU with France to also have a grip of the Nigerian tax system even when he leaves power?
Well, that would be allegations. Alpha Beta has been there, and there is no.
They've been notorious for collecting tax and remitting to
that has been a well circularized rumor, which means that the directors, the shareholders, and the persons of significant control within Alpha Beta company has not been well linked to the president himself. Even if well linked to the president, I don't believe, or I don't want to believe, that the president is the president's interest is working against the national interest or the Lagos interest in that regards. And even if it is, I believe that the Lagos state government, the Lagos state citizens wouldn't have allowed that. And if they've allowed that, that means something is wrong with the system, which we need to correct. This kind of agreement, with this kind of MOU, will not play that type of Alpha Beta role, because I believe, or I don't see every part of the country being pocketed into a single man's account.
But the opposition political parties, raised that concern even before this MOU was signed. They did say that the Lagos tax template is what is being implemented at the federal level.
Well, we have the National Assembly immediately.
But this is not the National Assembly to rely on. They've been more of a sleeping National Assembly, with due respect.
Yes.
I think this is the worst National Assembly Nigeria have ever had. With due apology.
I understand the points you are coming from. But that as it may, in the interest of each senatorial zone, in the interest of each federating unit, you should not put the interest of your geopolitical, the where you represent, above and over and above a single man's interest. I believe that that will not work good. But this is the political aspect of what we are discussing. So the bigger picture might be that we are achieving better than we are giving out. Giving out in the sense that FIRS itself may not be able to run its affairs alone. You may need to partner with one or two non-governmental agencies. You may need to partner with one or two private organizations. So how well these private organizations are linked to the presidency, to the president, or to his cronies would be for the NGOs to unravel and to bring out the information that surrounds it. Then if that is on table, I believe that it's just a matter of time. It will not last for long.
Okay, but let me ask you, we've gone through the political terrain, and then let's come back to the professionalism itself. You are a tax expert. How does the tax data work? The tax ecosystem, how does it work? Before we begin to say, okay, we can easily hand it over to a foreign company or to a foreign interest.
The tax ecosystem works in the sense that we have the global stage first, then we have the national stage at the second layer. We have at the first layer, then the global stage at the second layer. Then we have the state layers, the joint tax board at the third layer. Then possibly the local government. The federal government controls what happens at the global arena and what happens at the federal arena. So whatsoever data they mine from these sources forms what we call the database, and what we call the tax database. So we can get the federal database from what is obtainable in the country, which has to do with the TIN, the BVN, the NIN, the transaction monitoring system. So those are the ways we can obtain data at the federal level from, and data at the global level will be obtained from country by country reporting, from interborder relationships, which led to this MOU, and what is obtainable from intelligent reports. Intelligent reports has to do with under table dealings, and has to do with many things that happens in the global stage. We may need to benefit from streaming. From streaming, what happens on the streaming platform, on the video platform, on the AI platform, on the global search machine platform, and on the tech innovation platforms. So if we don't play globally, we may not harness this opportunity, and we may not bring in more revenue from the global stage into our country. Currently, US is benefiting from streaming platform because most of this revenue hits the US government first before being distributed at their own percentage dictates to other countries. So why should we allow that to continue? We have the streaming platform getting content from Nigeria without paying the adequate tax. Why should we allow that to happen? Why not meet them at the global stage? Meet this streaming platform, tech platform at the global stage. Bring in their income, whatever they realize in Nigeria, whatever they realize for Nigeria, whatever they realize by dealing with Nigeria. Let's bring it into Nigerian revenue pops. So I believe that is what this MOU targets to achieve. While we now come to the federal level database, I think the federal level database will not be surrendered to any nation because that is individual data. And my account, your account will not be given to France or for any other country to analyze. If you're analyzing it, you are only teaching our staff, I mean NRS staff, how to mine data and analyze the data.
But let me ask you, so for you, you don't share the concern that we're handing over our tax base to a foreign country?
I share the concern to the extent of how much data are we sharing.
But how much data is, I just asked you, tax, database, how does it work? Is it not just an ecosystem? Is that not an ecosystem where everything is in one place? Or is it segmented? Because you said at the state level, at the federal level. So which one will be handed over? Is it the federal taxation that will be handed over, all the states, or everything cumulatively?
I'm envisaging two levels of technical assistance, which has to do with the global playing field. That is, whatever information we gather from the global stage and from the global arena, whether within Africa or outside Africa, and within all aspects of the globe, will be shared globally. Nations are currently doing that. France and other nations are currently doing that. Nigeria and other countries are currently sharing data. That's country by country reporting, through country by country reporting, and other foreign tax policies. So we have that. Then we have the local database, which has to do with what we obtain from our citizens within the country, what we obtain from our entities within the country. That will not be surrendered. That should not be surrendered to any country in order to either gain revenue advantage or whatsoever. That should not be in any way surrendered to any country. And I believe that the Nigeria Data Protection Act will guide the extent at which we go. So if we now surrender our back-end database to any country, it becomes acting ultra vires in the sense that it is not within the knowledge of whoever owns the data. It is not within the knowledge of National Assembly. It is not within the knowledge of the country to have done that, and it is being handled over. What's brought this to light is that we've signed an MOU. What if they call France? What if they call Germany? What if they call Canada or US to come and work on the data?
But the fact that it is France, that's why it is raising this concern.
The fact that it is France,
because people don't trust France.
Publicly signed. What if it is signed through the back door, or signed through the arrangement is through calling their experts in, and we have data misuse? So there is a kind of duty of trust on FIRS, a high level of trust from FIRS, because the citizens and entities are more exposed currently than they were before, currently than they were in the era of
it would have been in the public domain, whichever way, even if they had signed it behind behind the scene, there would have been an exposure in terms of investigative journalism and reporting, and then some maybe disgruntled staff would have even leaked that MOU, and that would have cost them more damage than they are. So I think they've been clever by trying to sign the MOU publicly and say, look, it is all about knowledge sharing, it is all about cooperation, it is all about synergy, and it is all about the global play. But let me ask you, when countries go into this kind of agreement, beyond the knowledge sharing and collaboration, what exactly are they hitting at?
Well, playing globally. That's the first thing to hit at. That's number one. Then ensuring that we do things more transparently. We know that illicit fund travels through our borders, travels through one border to the other. So what belongs to Nigeria in terms of illicit funds could be well monitored through these countries of destination. So if France is one of the countries of destination, it pays Nigeria to have an alliance with France or Swiss or any other country in order to bring these funds back to Nigeria, or in order to tax it well, so that we will not enjoy the profit shifting arrangements. Profit shifting in the sense that where it pays me to pay tax in Nigeria, I'll shift much of my profits to Nigeria. When it pays me to pay taxes in Bahamas, I will shift my profits to Bahamas through the trade arrangements.
Okay, but is that not where the problem is? Because of our own higher taxes. So if we're saying we're playing globally, by the time, would-be investors look at how much our tax is, how much charges we, as far as our taxes are concerned, and then they compare it with another country which has lower taxes, wouldn't that be a minus for us? Because people will say, let me go to countries where they have lower taxes for me to be able to operate my business, but rather than going with higher taxes and less attractive infrastructure.
That's investment decision. But
investment decision is guided by the taxation itself.
Let the government be aware. That's the logic. Let it be legally backed up. Let it be a product of tax planning and not tax evasion. Not that you are running away from taxes, but you are planning your taxes. If it is globally known that taxes in Nigeria is 5%, then you can easily shift your profit to Nigeria. But other countries, we want to tell you that you are using our infrastructure, you are using our knowledge, you are using our soil to produce this. So whatsoever profits in the proportion of whatsoever you realize on our soil, pay tax on it, rather than shifting it to where it is cheaper. Yes, it is being done. It is being done in that way. But imagine exploring oil in Ogoni. Imagine exploring other mineral resources in Nigeria, leaving the land devastated, but not paying the actual tax to refix the land to ensure.
Do you think this will control tax evasion?
Definitely, because it provides more information to the NRS to do the needful.
But in this country, we always see that only the poor are being taxed. Only the poor are being followed bumper to bumper in terms of remitting their tax. It is all about squeezing the poor to fund the system. The rich are not always the target. So the rich have been the ones that have always been invading tax, and they will also find their way as far as this is concerned, because you and I have discussed taxation in Nigeria. We talked about the disadvantages and all of that. We have seen that the rich don't really pay tax. They always have a way of invading tax.
So we are back at the new tax law. The new tax law seeks to make things more transparent, so that as a rich
but the new tax law is also exploiting Nigerians, especially poor Nigerians. How do you explain that? Because I earn a salary of 800,000, you are removing 10% from my salary. 800,000 of today. Is it that a big deal?
That's 0%. It's
10% of my 800,000.
No, 0%. It's 0%. If you earn 800,000, you will be taxed 0%.
Not 10%.
Not 10%. Even the next tax rate is not that strenuous. So the idea of the PIT, which has now been merged into Nigerian Tax Act, is to ensure that the poor pay less while the rich pay more. So it's a kind of graduating table that ensures that. Then you may likely want to tell me that the poor is more exposed in the sense that what passes through the bank statement or what passes through the transactions are not seen to the tax authorities. But now that the tax authority seeks to make things more transparent, it will be well explained. Now it is now left to human contact. Human contact may mean that the poor may not have more to give or part away to ensure that they don't fall into the bad side of the law, while the rich may have the beacon of phone calls to tell whoever is in charge to release my file and let it go. So that aside, the system are more transparent and less in the hands of an individual. Your file may be reviewed by a single staff of the RS, Revenue Service, whether state or federal, but by the way of the e-platforms, your transactions will be seen by superior officers, by other higher officer, management officer. So if that is the case, you may be called to come and pay additional assessment, and that becomes you against the entire system, not you against the staff again. So I think they've been nipping the concerns at the bud.
Okay, at this point, we'll take a short break, and when we return, we'll be talking about the new tax law. I'm not going to leave Mr. Joshua going as we approach the year. Let us understand this new tax law and who will be affected as soon as the year begins. That will be after the break. Stay with us.
On December 10th, 2025, something happened in Abuja that most Nigerians did not hear about until it exploded on social media. Do you know that the Federal Inland Revenue Service quietly signed a deal with France? A deal that gives Paris a front row seat to Nigeria's entire economic dashboard. It is called a Memorandum of Understanding between Nigeria's FIRS and the Tax Authority of France. Under this agreement, Nigeria will share what they call aggregated and anonymized tax data. France will train Nigerian tax officers, and French AI systems will be introduced into the new Nigeria Revenue Service, launching January 2026. Even aggregated data reveals everything. It shows who is making money in Nigeria, where the wealth is moving, how strong or weak our economy truly is. Once France has this information, they have it forever. France is not a charity. This is the same France that still controls the currency of 14 African nations through the CFA franc. The same France with a long history of economic influence over African countries. The deal was signed without National Assembly approval, without public debate, without updating Nigeria's Data Protection Act, no hearing, no scrutiny, no transparency. Nigeria already has the talent to build everything France is offering. We have Flutterwave, we have Paystack, we have Remita, and many brilliant engineers across our universities. But they were ignored. This is not just about tax. This is about who controls Nigeria's economic future. When a foreign power can see your economy in real time, they gain leverage, political leverage, financial leverage, trade leverage. They can predict your moves. They can influence policy. They can decide which Nigerian businesses rise and which ones die before they even begin. This is digital colonization. Very silent, very sophisticated, and more dangerous than anything we faced in the past. We stopped the colonial tax in 1960. We can stop the digital version in 2025. Here is what you must do right now. Share this video everywhere. Tag your representative and your senator. Deal. Demand a public hearing before January 20th France deal. Demand a public hearing before January 2026. Tell the government to modernize our tax system, but with Nigerian brains, Nigerian companies, and Nigerian control. If we do not stop this now, there may be no data left to fight for later. Thank you.
Welcome back. We're still discussing the tax, MOU that was signed, and Mr. Wale Joshua is still in the house. Yes, Mr. Wale Joshua. Before we went to the break, we talked about the new tax law which will take effect in January 2026. So much apprehension, so much fear already in the air in an economy that is even struggling. A lot of people are struggling to even survive. But before we go to the new tax law, let's look at some of our, the with advantages of the MOU include global play, sophistication, and the fact that you said
transfer of knowledge.
So let's look at the disadvantage. You were talking about transparency, but a lot of people are saying when this MOU was signed, there was no public debate, there was no public scrutiny, there was not even National Assembly intervention. So what are some of the advantages? The disadvantages that this new MOU, the MOU that was just signed, will bring about?
Perspective.
Yes.
We have a perspective of a nation that cannot cater for all of its needs. So that's number one. Number two is the fact that we are seen to lean towards the West. So that's on the political side. On the economic side, we are exposed to, we can't tell France that we don't have monies to pay their, they're seeking loan from them. Then we may not have the luxury of protecting some information, whether we like it or not. France will know that there is a kind of volume of trade going between Nigeria and either an individual in India or a country in West Indies. So that may be, we may be exposed to a kind of global information. Our information within the national space may be protected through our local effort, but information transfer within the global space to Nigerian domain will already be known to whoever is analyzing this relationship between France and Nigeria. So a little level of exposure, perspectives, and foreign influence mismatch in the sense that we may not be able to grow our own solution to the level that should have been able to do this. If we are to partner France, we may call one or two other fintech providers. We may call one or two professional practice maker. We may create a department within the NRS agency to cater for these needs, and that will strengthen that particular department, that will strengthen that particular agency, and that will strengthen that particular staff strength. So instead of doing that, we are losing out by partnering with France. So, but I believe that will be short-lived. Then, clause by clause analysis. We've not gone through this MOU clause by clause.
To even understand it better.
We went...
shouldn't the government or the NIRS make it public? Let them just publish it and then people can go through.
Well, this is economic issue, and they may feel the government may feel like sharing the MOU may be anti agreement between France and Nigeria. That's one. Then the office of the Attorney General must have gone through that, but it might be good for us to allow the National Assembly to go through the MOU and see whether it is of good interest of the nation to run through that kind of agreement. Having P&ID at the back of our mind that only a clause led Nigeria into a near parting away with,
like what we had in there. Yes. Is it not also possible that the next administration, when they come in, they can also knock this agreement off?
Very possible.
And enter into MOU with somebody else.
Very possible. But I used to say this when argument like this comes up. A strong system is desirous, but when you don't have a strong system, you may get a strong system through a strong man, and a strong man will not hand over a strong system to a strong man, because a strong man will create his own policy. So it's likely or very likely that a strong system which is being built to support a strong policy will not be handed over to a strong man other than a strong system. So we are expecting that a strong system will be put in place to manage whatsoever we have currently. So I believe that the next government may be pro.
But it also depends on who comes next. If we have an opposition who is already looking at it as a very suspicious MOU and very scandalous to them, then it is a no-go area. Don't forget, this is democracy. Anybody can win election and anybody can come to power.
So the administration must be led by a strong man then. So, but if not, the strong system will prevail on whoever is.
But it's not a strong system, because we have not even tested it to see if it is strong or not, because already going into public scrutiny.
Well, it depends. A system is strong as much as the power you give to it. So I believe that this current administration will build powers around its policies so that it will not collapse while they turn their back at the end of their administration. So I believe that they will leave a strong system which is sustained by a power structure, rather than putting a strong man.
What do you mean by power structure?
Power structure means like a strong agency, a strong law, a strong
laws are meant to be amended.
That is why you may not want to put a strong man, a powerful man that will see that as an avenue.
It's not about you putting a strong man. It is about people voting a strong man or a weak man. So, because this is democracy. After 4 years or 8 years, you are gone. You don't know who comes next. That's not within your power. That's within the Nigerians' voting power.
That is now if the administration if the citizens sees this policy as being too bad for them to
yes, and they will change it.
Well, if you read into the politics of the new tax law, you see that the implementation is 2026, which is the election.
That's next year.
Election year.
Yeah.
Before you start having exposure to tax authority on the strength of this new tax law, it will be in 2027. So that is when you start complaining, and the election will have been concluded then.
That's what I'm saying, that when the election is concluded 2027, if it is not this government that comes back to power,
in 2027,
the next government decide what to do with it.
So that is politics. That is politics. I do not understand politics.
Yes, and politics drives economy.
Political economy. Yes.
All right, so let's go to the the new tax law, which is coming up in 2026 with a lot of apprehension already in the air. Now it is first 800,000. You have And anyways, I try and educate us, because what we've been seeing, even though FRS has not come out clearly to say, look, this is how you are going to be taxed, what we've been seeing, flying around is that for every 800,000, you're being taxed at 10%. For every 2 million, you're being taxed 15%. And then if you are a limited liability company, you've already paid your 7.5% and withholding tax, so you are not going to be taxed.
Yes, thank you very much. I'll start from the PIT, which is Personal Income Tax, which has been merged into Nigerian Tax Act now. So the Personal Income Tax suggests that we have a graduating table allowing poor to pay 0%. Poor in the sense that if you are earning less, if you are now paying, if you are earning more than 800,000, and then you are paying rent not more than 500,000, you add that to it. If you are within that range,
what do you mean by paying rent? My house rent.
Your house rent.
I'm earning 800,000.
800,000.
And then I'm paying house rent.
You are paying house rent
of how much?
You are earning 900,000, 1 million naira, but you are paying an house rent of less than 500,000. You are allowed.
Where are you going to get a house rent less than 500,000?
That is the law. So maybe we need to reconsider that part.
Of course.
So
except you are going to go and stay outskirts of Abuja.
Yes, that is what is envisaged.
How can I earn 1 million naira and go and stay outskirts?
Immediately you pay more than 500,000, that means you are counted as either low income earner or the rich. So the poor are not expected to pay up to 500,000 naira. And when you pay that, add it to your exempted 800,000 naira.
That's 1.3. That
is 1.3. I'm trying to establish the fact that there are some exempted income, which includes your pension, life assurance, NHF, NHIS, which is a health insurance fund, housing fund, and then interest on owner-occupied building, funds used for owner-occupied building. So those are the exempted. So at the end of the day, you have your tax exempt income. If your tax exempt income is up to 800,000, it's not up to 800,000, you pay 0% on it.
Okay, so if my income is 1 million, my personal income tax, my monthly salary is 1 million naira.
It depends on if you pay pension. If you pay pension from that 1 million, it will be exempted. If you pay your
NHIS
health insurance fund from that, it will be exempted. If you pay your rent, it will be exempted to the cap of 500,000.
How would you know that I pay 500?
Yes, you come up with receipt.
Okay.
You come up with
receipt. Okay, so let's take it that I pay 1 million. I get 1 million naira
to pay government as taxable income.
As my own profit.
As your own profit.
As my own salary. Income, yes.
So if it were to be taxable in your hand, if it were to be taxable, that means we have allowed those expenses that are allowable. So we've allowed them, and you are left with 1 million naira. What will happen is that we exempt 800,000 from your 1 million naira. Will be left with 200,000. The next 200,000 will be taxed at 15%. Then you'll be whatever we get, whatever we have as the product of that computation is what you pay. Then if you are earning more, if by chance you are earning more than 2.2 million, earning more than 2.2 million, that means you are earning 3 million. We remove the 800,000 first, which makes it remaining 2.2 million. Your 2.2 million will be taxed 15%. But if it is more than 2.2 million, the next level, the next range will be taxed at 18%.
When you say next level, what is the time frame? Is it that every month this new
every month.
I migrate? So if I earn 3 million today,
if you earn 3 million today,
yes, if I earn 3 million today, you remove the 800,000. I have 2.2.
If it was
so for the next 1 year, I'm earning 2.2.
We have two classes of personal income.
Okay.
One is payee, which is salary based. Salary is almost constant, while the director's income, professional income,
advance allowances and all of that.
It varies based on your income. So for your pay, you pay it every month. That is based on salary. You pay it every month. But for your personal income tax, you declare it at the end of the year. So you add all of your income together. Then you pay tax on it on or before March 31st the following year. So that's the ones that relates to the directors or that relates to other sources of income will be paid on or before March 31st, you will have been aware, you will have been sure of whatever you have between January and December. So you can now pay your tax on it. While the salary element will be paid monthly. If you are into businesses, side hustle, and you earn salary from other places, you use the amount, you declare everything that you earn for the year, including the salaries. Then you use the portion which you have paid on the salary, you use it to settle what you ought to pay for the year. And then you'll be good for that filing. So the first step is self-assessment. You declare whatever your income is for the year. Then
only people who earn 800 and above are the ones who
will be taxed.
Who will be taxed. Now let's come to small business holders. People who do their own side hustle, and then they get a payment of 2 million or 3 million into their account. So what happens to that money? For instance, I'm into maybe tiling or into tailoring and something like, and I get baking. A job of and somebody pays me 2 million or 3 million into my account.
Yes.
I've not bought materials. I've not even done the job.
That is where the account will set in. You have to prepare the account, approach the IRS to tell them this is my expenses.
If I'm a registered company, I've already paid 7.5%.
No.
When I'm vying for the job.
We have two levels of taxes.
Okay.
We have the transactional and the direct taxes.
Okay.
What you refer to is the VAT. Okay. The VAT element and withholding tax element. Those are transactional.
Okay.
They are just transactional in the sense that whoever wants to pay you will take cognizance of those taxes surrounding the transaction as a single entry or as a single transfer. But you cumulate all these, determine what your profit is before you now pay tax on your profit, which is called CIT, company income tax. So after doing that, that is what you declare at the end of your business year. At the end of your business year. But for transaction taxes, it is continuous and it is filed every 21st of the month of the following month. So
for business people, they are added a transactional taxes added to them.
Yes, we have transactional taxes which they are exposed to. The transactional taxes includes the value added tax, the stamp duty act, the withholding tax, which is on itself not a tax. Then the capital gain tax and any other tax that surrounds. And the income tax has to do with the company income tax and the development tax going forward from 2026.
But that's what we do every year, isn't it?
Yes, that's what we do every year.
But you are saying now every month we still have to pay tax?
No, not every month. If you have a transaction in the month of event, you must have invoiced your service charge inclusive of VAT.
Of course, that's what we do.
Yes, that
as company owners.
That VAT is what you remit at the end of the month. At the end of every month, every preceding month, you remit whatsoever the cumulative invoices. You remit it at the end of every month. Like for this month, December 2025, you are going to remit all your VAT on invoices. The amount on VAT on amounts on invoices before January 21st, 2026.
Okay.
If you've done that, you are free. But if you have not done that, that means you've run foul of the law.
What if I don't have any business transaction?
Then you tell government that you don't, which is zero filing.
Okay.
You file zero.
So now business owners will be asked to file every month, unlike annually that we used to do before now.
You have to file every month. That's even the misconception that FIRS is trying to rectify by their e-invoicing. That means most people they don't know the difference between VAT and annual taxes, which is the company income tax. So the VAT is per transaction. As far as you are transacting, you do VAT and you remit it at the end of before 21st of the
it's already been deducted by NIRS. So what am I going to remit? Only the receipt? Because they already have the record. They deduct.
That is when you deal with government. When you deal with government, oil company and
Okay, you are talking about
customs.
the normal buy and
Yes,
sell. Okay,
yes.
so let's go to somebody who doesn't have a company, who doesn't even have anything like a tailor or a hairdressing or people who are into tidying or window framing and all of that, and they get a job of somebody paying them 3 million or 5 million naira to do the job. So what happens to them?
Yes, two things. Either they see the payment as a bulk amount, like you are being paid to plait my hair and you are being paid 3 million naira. It becomes taxable in your hand because you didn't buy anything to plait the hair. You only bought you only add your technical know-how. So that
Am I
aside,
not going to buy air units to on my AC and to have light in my shop or in my salon? I'm going to wash the hair. I'm going to buy shampoo.
That is
and
where
all of
that is where the cost comes in.
Okay.
If you feel that you have incurred some costs in making sure that you earn that amount, you are free to declare the costs. But this time around, two things are very, very necessary.
Let's leave the hair. Let's go to people who are going to buy material. I'm into tiling. I'm being paid 3 million naira to buy tiles and to also do my to also for my services. So what happened?
You remove whatsoever the cost is from whatsoever.
Okay, the material I'm going to buy.
Your income, yes, the material you are going to buy. So tax is on profit, on that profit.
So if my profit is 800,000.
Yes, you now be exposed to whether you are an enterprise or whether you are a limited liability company. If you are an enterprise, you'll be subjected to the graduating table, below 800, below 2.2, below 13 million. But if you are not and you are a limited liability company, the issue is, did you earn up to 100 million in the year of concern? If you don't earn up to 100 million in the year of concern, you'll be classed as a small company, which is taxed at 0%. So your company will be taxed at 0% if you earn 800,000 naira for that year. But if you have registered as an enterprise in your hands, because enterprise is just like a nickname. So if you have registered like an enterprise, it will be taxed based on that 800 to 2.2 million, then 13 million. So on that graduating table. But if you have registered as a limited liability company, you will record your income, file your income, file your costs, administrative costs, direct costs, determine your profit. And if the profit is within the threshold, if the turnover is within the threshold, the taxable threshold, you tax it at 30%. But if not, you will tax it at 0%. So that is it. But the concept is that what belongs to the company belongs to the director, because at the end of the day, they will have to share the profit. When they share the profit, it comes to them as a dividend, and the other part goes to the company as retained earnings. The dividend part goes to the director and is taxable in the hands of the director in that manner.
Okay, Mr. Wale Joshua, so much complexity around. I'm trying to understand how the man on the street will understand all this discussion around tax. Who is going to help him break it down? Because for somebody who doesn't even understand all this tax wahala, he gets a job of 2 million or 3 million to buy material, and he will buy the material, and then they will just see 3 million into his account and then deduct 15%.
Yes,
because nobody is going to go to him to ask him how much material are you buying. Nobody's going to go there to ask him.
I'm envisaging a busy year for the accountants in 2026 in order to establish
because it's also going to fuel this money, people not taking their money to the bank anymore. People will say, if they are going to tax my 3 million, please just withdraw the money and give it to me. I don't want any problem.
Who does that?
No, but because if FRS or NRS just see 3 million in my account and then they deduct 15%, because nobody will come and start explaining to me that is when you buy material, the remaining one is what we are going to tax you on.
What about the source? The source might have exposed the person. Like, you have been paid 3 million from my own hand. I paid you 3 million. I withdrew 3 million from my bank account to pay you. So if I've reported that I paid so 3 million naira and is in is in the record of FIRS or NRS, it becomes taxable in the hand of that person because there is an intelligent information. And that is why the intelligent information is very, very critical, because most people, they find a way of dodging from the transaction net. The more you dodge from transaction net, the less you pay on taxes. And if you pay less tax, the onus is on the RS to find a way of gathering information. That led to that MOU signed with France, because most people are hiding. They hide their transactions, especially those who are in under table dealings. They hide their transactions.
And so there'll be more dodging. There'll be more dodging because nobody is going to come and explain. Even if I'm going to pay you 3 million or 5 million, I'm not going to go to FRS to say I'm paying Mr. Joshua 5 million.
If you are able to dodge a certain amount of money, it's worth the cost, because the cost of dodging may not be as good as cost of complying. Imagine dodging and you start keeping monies in under your pillow. What happens to it? It's exposed to risk. Even if you are not paying tax on it, the cost of protecting that fund is equally a cost on its own.
So the way forward will be to create a platform that, will give more information, to people and explain to people in details, this whole, because I'm not seeing so much awareness, check you out, find you out, and then you're meant to pay. But the smaller traders are the ones who are going to bear the brunt of this tax, law, if there's no proper enlightenment by 2026.
We will appeal to our taxmen to be fair, because they are the main port of contact. Because whatever they do, whatever their dealings is with the informal sector and with these common men, will have impact on their livelihood, and will equally have impact on their businesses. So it's always better that we appeal to their conscience to be fair enough and to be rational enough while dealing with the informal sector, who has little or no fund to engage professionals, accountants, software, and many other tools to assist them get assessed fairly. So we shouldn't see the informal sector, or we shouldn't see access to information as access to meeting our targets, whether the budgetary targets or individual offices targets.
Okay, do you see a shift of
what I have as the body language of the presidency? I don't see that.
Okay.
I don't see that.
Okay.
What we may likely see is a little shift, and if that shift comes in, I will only conclude that is to allow the political processes to get off first before implementation of the law.
Okay.
So I personally will read, and if the political processes to get off first before implementation of the law.
Okay.
So I personally will read political meanings to it.
Okay. All right. Mr. Wole Joshua, I know this discussion will continue, especially when we hopefully and prayerfully enter 26 and we begin to see the implementation of the law. Then we can still come back and look at it holistically. I want to thank you very much indeed for your time.
Yeah, welcome very much. Thank you.
All right.
Yes.
And that's the show. It's been a very, very taxing discussion today. And I can assure you it will continue. 2026 is going to be called the tax implementation year. And then all of us will be running helter-skelter to understand where we are. And that's the show for today from me, Medina Azaki, and the whole team here. It's bye for now.